What stocks should you buy in 2026? We asked our top ticker take stock pickers for their list for the year ahead. Coming up, we'll highlight 12 stocks and we'll explain why. So let's get started. This is Ticker Take.
John, let's explain how we created this list of stock picks for 2026.
Definitely, Caroline. We've had some amazing guests, dozens of great perspectives in the past year on Ticker Take, and I'm pleased to report that of all those stock picks, on average, these guests have easily crushed the market.
And we invited our top tier performers to come back and share an idea for 2026, but with one condition.
That's right. We wanted to look at stocks that were recommended last fall when Ticker Take launched up until the first quarter of this year, mainly so there would be at least 6 months to a year of returns to analyze.
Yeah, and since their stock picks were based on returns rather than a specific sector, their picks cover a range of investments.
It's true. There's some growth stocks, some defense names, a gold stock, even AI recommended stock ideas for your consideration for 2026.
All right, should we get to the list?
Let's do it. But first, this is not financial advice.
In alphabetical order, stock number 1, Agnico Eagle Mines.
This take comes from David Burrows of Barometer Capital Management. Now, David was recently a guest on Ticker Take, but he had shared Agnico in a past appearance, and that got him on to the top Ticker Take stock pickers list in 2025 because Agnico's had a great run. The reason he is picking it again is it's David's belief that we're in a bull market for gold, that for the best gold producers, that's going to really help their cash flow. In this case with Agnico, he sees this as the company that did well in the previous bull market, a company that has not cut its dividend in more than 4 decades. And when you look at the street calls on Agnico, about 85% of the analysts still like it. And even after the run-up that we've seen, they would not be surprised to see it higher in a year's time.
Stock number 2, Applovin.
This take comes out of a video we did on growth stocks to watch heading into 2025. Now, when we did that video, we based it on the Wall Street consensus view, stocks that were recommended by a majority of analysts, stocks that were on average expected to see an increase of at least 15% in the year ahead, companies that were expected to see revenue and profit growth of at least 15%, and based on their growth tied to their valuation looked reasonable, that they had a PEG ratio of less than 1. When we did that analysis in that previous video, there were a number of stocks that screened well, including Micron, and Micron ended up being one of the standout stocks on Ticker Take in the last year. So we did that same analysis to bring you another take from Wall Street, this one being Applovin. Now, Applovin is not a stock secret. I mean, in terms of the performance since they went public in 2021, you're not going to find a lot of stocks that have had better performance outside of NVIDIA. But the shares have come off their peak. There's some short seller attention on this company, and so they're navigating some hiccups. But most analysts still like the company, how they're leveraging AI. I shared those numbers with you, so we'll see what happens in 2026.
Stock number 3, Better Home and Finance.
Well, this one comes from longtime Ticker Take guest Eric Jackson, who's had a lot of great picks and easily tracks on the Ticker Take top stock pickers list, in part because of TIGR, one of the names that he talked about very early on that ended up having great performance. Since then, he's talked about everything from AI stocks to quantum computing. And more recently, we've heard a lot from Eric on Open Door. Let's find out why this particular stock, though, is one he's watching very closely heading into 2026.
Thanks, John. The ticker is BETR. I have tweeted about it already, but the market really hasn't picked up on the vast potential. And I would make the similarity between Better and really what Palantir has done in a general sense for AI that we've all witnessed over these last few years. But what people think of with Better Finance is that it's just an old mortgage company, and mortgage is the housing market is dead. Nothing is happening. They've been losing money. But that's an entirely backward way of looking at Better. This is a company that over the last few years has totally reformulated itself into an AI company that's sort of masquerading as a mortgage company. And so they are now able to follow exactly the same Palantir playbook. Palantir is what it is today because of two things. ontology, which is something Alex Karp talks about, which is a fancy word for how Palantir structures an enterprise's data when it comes in and starts working with it. It sort of makes sense of all the different hodgepodge of data that exists today within any organization. And then they layer on something on top called AIP, Artificial Intelligence Platform, which is sort of like the LLMs and the agentic AI that makes sense of the brain of an enterprise's organization with all of its data. And what happens is there's a long S curve at Palantir where it seems like they have small little contracts to begin with, and therefore it's not very big. And yet suddenly there's a rapid explosion of revenue because organizations see a payoff from the use of AI that Palantir has layered on top. BETR is doing the same thing in mortgages with something called Tin Man, which is their version of ontology, organizing, making sense of your credit score and all this disparate information that tells them, what's the best kind of mortgage you should get and where to get those mortgages. And then they have something on top that they've built called Betsy, which is that agentic AI piece that puts the information into action and delivers the best mortgage for you. They were able to do all this with far fewer people than anyone else in the world, to the tune where it saves consumers at least $2,000 per mortgage because they're using AI. The other thing is that BETR doesn't have to use about 1,000 people that they used to have to use a few years ago offshore in India to actually make all of this happen. That results in just like lower cost mortgages for you when you use them, and at better prices and better refis and better HELOCs that are available through their platform as well. So the market is still treating the company as a money losing company tied to an 8% mortgage world. They're about to see an explosion of revenue and high margin growth for BETR, just as these rates continue to drop over the next few months and into 2026. And I think that there's going to be a total re-rating of BETR stock by the time we speak a year from now. So that's why BETR Home and Finance is my top pick for 2026. It's a real life version of how AI is going to make a lot of industries a lot of money.
Stock number 4, CleanSpark.
This one comes from Adam Johnson, longtime Ticker Take guest, and Adam stood out with a number of his picks from Uber to Wynn Resorts. It was the performance of Joby Aviation that got him onto our top Ticker Take stock pickers list. Why is he now looking at CleanSpark for 2026? Let's have a listen.
For starters, it's the lowest cost bit miner in North America. They can mine Bitcoin cheaper than anybody because they booked up all kinds of cheap energy. So as they run their data centers, it doesn't cost them as much as the other guys. Number two, they have excess capacity. So they're going to be able to start steering away some of their Bitcoin mining operations towards, you guessed it, artificial intelligence. And we know what that means. There's all kinds of upside there. And then finally, John, it's just trading super cheap. I mean, under 10 times earnings. So where else can you find a stock levered to crypto and artificial intelligence and is trading at less than 10 times earnings with, by the way, double-digit growth? So CleanSpark is the one for me.
Stock number 5, Exchange Income Corp.
Okay, this one comes from Andrew Pink, who had a standout call with Atkins Realis, the engineering firm, and he's playing a little bit of defense for 2026. Let's hear more on why he has selected this particular company.
Exchange is a defensive name. They buy and operate companies in two verticals, in aviation and manufacturing. The tie here is that everything that they buy is defensive in nature or is an essential service of some type or has recurring revenue. So on the aviation side, they run regional airlines that fly into the north of Canada. This is essentially the only corridor for people to get to and from these remote regions. They also have a maritime surveillance business where they essentially lease aircraft to governments around the world. And these aircrafts are very specialized in nature and they have immense amount of surveillance equipment on board. So this is for protecting borders. On the manufacturing side, they more recently bought a mats business. And this is a company that leases industrial grade mats to companies like utility companies and energy service businesses that need to get into remote areas, that you need access. And it's also an environmental requirement that they place down temporary roads. So this is a diversified company. They're going to continue to run their M&A strategy. And they have a phenomenal track record. So since 2008, this company's performed more than 20% per year on average, and they got a nice 3.5% dividend.
Stock number 6, First Solar.
This one comes from Doug Clinton of Intelligent Alpha. Now, Doug was one of the first Ticker Tape guests, and he's been using AI in his stock picking process. That's what led him to Monster Beverage, which ended up being a very solid performer. Why is he now looking to First Solar in 2026? Here's Doug.
Our models have liked First Solar for the last few months, actually. And there's a couple reasons why. First is if you just look at it on a fundamental basis, it's pretty cheap. It trades about 12 times next year's earnings. And I actually think First Solar has an AI story to it. They haven't gotten the AI bid that we've seen in a lot of these other energy companies that trade at 20, 30, 40, and even higher in terms of forward PE. And the reason I think they have an energy story is that so far we've talked about powering these data centers. That's become the major concern. We talk a lot about nat gas, we talk a lot about nuclear, but guess what? Solar is going to be a part of that. And I think that they are probably the best solar company in the world. And ultimately, they will benefit from it.
Stock number 7, MDA Space.
This one comes from longtime guest John Zechner, who had an absolute home run with Celestica, which has had sensational performance. When it comes to 2026, why is he looking at MDA Space? Here's John.
Well, I like it in here because, for one, the stock has fallen dramatically over the past couple of months for a couple of reasons after a great period of growth. But they lost the EchoStar contract to SpaceX, the SpaceX build-out in August, and the stock dropped. And now the worries were they'd also lose the Globalstar contract as well, and they're both billion-dollar plus contracts, and that's really worn down the stock. It's dropped more than 50% in the past 4 months. And I think it's an opportunity because these guys are still the arms dealer of the space race, as they say, and a great Canadian company. There continues to be growth in space to land communications. We've seen that from all the cellular providers rolling out their satellite offerings now on a consumer basis. So I think there's plenty of growth here. Good Canadian company. Valuation has come down dramatically. The growth is still there. So even if I think we're assuming the worst on the Globalstar contract, so even if they did lose it, I don't think there'd be much additional downside.
Stock number 8, NiSource.
Okay, this one comes from Sam Stovall and the CFRA research team. Sam is the chief investment strategist. In the past, on behalf of the CFRA team, he shared a number of interesting ideas that ended up being strong performers. It was GE Vernova's strong performance that got them onto the top ticker take stock pickers list. Let's find out why Sam and the team are now looking to NiSource in 2026.
This time of the year, I frequently get a question from investors: should I buy last year's winners or last year's losers? And of course, the right answer to most financial questions is that depends. If last year was a down year, then you want to own the 3 worst performing sectors because they tend to outperform in the coming year. Yet if the prior year was an up year, you want to let your winners ride by owning each of the top 3 performing sectors. Not surprisingly, in 2025, year to date through the middle of November, it was communication services and technology in the lead. But a bit of a surprise was that utilities was the 3rd best performing group. I have selected NiSource, ticker NI, an Indiana-based utility, as it aims to capitalize on data center growth by partnering with an investment-grade data center customer, which will build and operate the data centers, while NiSource's NIPSCO generation subsidiary will provide the electricity service over a 15-year power purchase agreement.
Stock number 9, Pinterest.
Yeah, this one comes from Teal Linde of the Linde Equity Fund. And what stood out with Teal in the past year was he looked at Air Canada shares when they were really taking a tumble, and that ended up having a solid return. So for 2026, he's looking at Pinterest as a company that offers growth, but at a reasonable valuation. Now, Pinterest doesn't get as much attention as some of the other social media platforms, but they've crossed 600 million users actively per month. They have a big international business. Their app is very popular. The management team is leveraging AI. And for Teal in particular, when he looks at this company and the revenue growth versus the average S&P firm, it's nearly 3 times the top line growth, and yet a valuation discount compared to S&P companies, which is in the neighborhood of 35%.
Stock number 10, SK Hynix.
Well, for context, you might remember we did a video called Buy What You Know. In that video, Caroline highlighted she had invested in Roblox, or kids play Roblox. That's ended up being a star performer. So Caroline, we wanted to get your take on what you're watching in 2026.
Thank you very much. And I just wanted to be clear, this is not financial advice. This is just my personal opinion. And I first heard about this stock when we attended the Zone conference in Montreal from tech investor Gavin Baker. My pick for 2026 is SK Hynix. They are a top maker of high bandwidth memory powering AI. They have a major deal with NVIDIA, and they have a strong lead with their HBM4 memory chips over Samsung and Micron. So they've had a huge run up, but they're still recommended by 95% of the analysts who cover them.
And a revenue and profit expectations for the year ahead that are actually somewhat parallel to NVIDIA, which we talk a lot about.
Stock number 11, Tesla.
This one comes from longtime tech investor Kim Bolton, who made it onto our Ticker Take top stock pickers list when he highlighted Google's parent Alphabet, which has had a great run. Now, when it comes to Tesla, why is it his 2026 pick? Well, there are some robotics themes as part of that. And you remember we recently did a video on robotics-related investments. Anyway, here's Kim with his take on Tesla.
The workhorse is the electric vehicle. It's contributing 3/4 of the revenue at fantastic margins of about 18%. But it's those other businesses, the energy and storage side of things, grabbing onto that autonomy and robo-taxis and the software with the full self-driving is going to be a huge contributor. The third side is going to be the Optimus humanoid robots. And then finally, their structural edge on the manufacturing and vertical integration does give them an edge out there. So putting it all together, we see, currently right now, Tesla stock is trading around 400, just shy of $400. It got all the way up to about 474 about a month ago. But we actually see in 2026, it could easily achieve price per share of around 650 to 700. And I really don't think it's impossible to think that Tesla stock by 2030 could easily achieve that $2,000 a share.
And stock number 12, Telus.
This one comes from Greg Newman of the Newman Group at ScotiaMcLeod. Greg had previously shared a very bullish view on NVIDIA, and that ended up being a very strong performer. Now he's looking to telco in 2026. Here's more from Greg on Telus.
I really like Telus. Why do I like Telus? Okay, number one, it's getting pounded down right now in tax loss selling. You take that away, all else equal into January, that's 5 to 10% upside from here. You add another 8% dividend, that's 13 to 18% upside before any catalysts happen with the name. So this is number one. So I think it's really easy pickings, and I like being super efficient. The markets are expensive here. There are home runs to be had still. One of the home runs that I've been talking about on BNN since about the $8 to $11 is ABXX for high risk capital. You can go play there. But I'm talking about for mom and pops, defense, retirees. So without even any catalysts, you're probably looking at 13 to 18% appreciation on Telus 1 year out from now. But what are some of the catalysts? Well, pricing is looking to probably improve with wireless. into the second half or first half of 2026. Freedom has to cooperate, but that's more likely. Telus Health continues to perform very well. Asset sales continue to be a theme, like some towers that they sold last summer. That really improves their leverage, which is a bit of a problem, improves their return on invested capital. That sort of thing can help lead to a re-rate for the stock. All in, the name is not that expensive. It's around 16 times, growing at 11%. Little bit out of the price to growth. I usually like price to growth around 1. This isn't quite that, but you add in the 8% dividend, and I think that it's very, very fair. So I think this is a name that people can score some real points, score a nice single, double with this name. It's not a home run, but there you go. If I got to pick one, I'm going to play a little safe.
All right, those are some amazing stocks to watch in 2026.
And you can learn more about our amazing guests in our description,
where you can also learn more about our weekly investing newsletter and the podcast edition of Ticker Take.
And don't forget to subscribe so you don't miss our next investing video. See you next time.